ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's session outlook. We see that the dollar have risen again against the yen, and that is, of course, after the Federal Reserve kept its monetary policy at ease for now. Of course, hinting that a possible June rate hike is on the table. Looking at the dollar rate, it actually rose to its highest level in almost 6 weeks against the yen, and that was on Wednesday, hitting, of course, our second objective on the pair. Also, looking at the Federal Reserve's interest rates increase in June, that, of course, could also improve the dollar's strength further, and that, of course, is not only against the yen, but, of course, against the euro, sterling. Gold have declined. It achieved three of our objectives, or all of our objectives. First objective on crude oil as well. That, of course, is on other concerns. Federal Open Market Committee, of course, unanimously agreed later on Wednesday afternoon to keep its benchmark rate at 0.75 to 1% for the time being. And, of course, as expected, it gave a conclusion that a temporary weakness in the economy is not a problem, and of course it's signaling a move ahead with policy tightening throughout next month. Today, however, what we're going to focus on is mostly from the European Union and, of course, US. Looking at the European Union, expecting market PMI composite and market services purchasing managers index out of the UK, which is still in the European Union for now. Looking at the consumer credit change, mortgage approvals as well, and of course out of US, challenger job cuts. Looking at the weekly job data, initial and continuing jobless claims, unit level cost, and of course factory orders, which is of course a very important inflationary gauge. Now, this is this is Jet. I'm sorry about the noise. We're just next to the presidency, so we're expecting for 6th of May, which is St. George's Day, which is actually the Day of the Army here in Bulgaria. So we're having a little bit of an exercise just above our heads with some choppers and jets right now. Anyways, later throughout the day, we're looking at the European Central Bank's president, Mario Draghi, also will have a speech. But before that, let's have a look at how the rest of the pairs and commodities are pricing in for now after a key rate decision yesterday. Firstly, looking at the euro, it lost, of course, ground versus the stronger dollar, touching 1.0875, or just resting just above the 200 exponential moving average. Right now, it's 0.0888. Of course, sidelines for now, nothing much to do there, as we can see that improvement in the European economy and, of course, improvement in the US economy is keeping the pair and its volatility relatively at bay. Also, the same case scenario could be said for the sterling and, of course, against the US dollar. Right now, slightly below the key 200 exponential moving average, and of course the 50 exponential, which is 1.29, which is also a key level. Right now, of course, further downside should be expecting below the 200 exponential towards 1.2790. That, of course, could happen on some relatively mixed or unchanged or, let's say, negative data out of the UK. We're looking at the consumer credit change in about an hour and a half from now, mortgage approvals as well. So we're looking for some data over there. For the dollar yen, we already spoke. We have achieved our second objective at 112.80, which we are at this moment, and of course 113 is our final objective for the moment. Crude oil prices, of course, they slid to 47.30, which is also a key support area, but of course meanwhile achieving at 47.40 our first objective, and our second one lies around the 47 area. For now, of course, we're going to keep our bearish scenario until the 50 exponential moving average is still intact. Gold prices, however, they have achieved all of our three targets in yesterday's session, as our recommendations were from 2 days ago. Of course, we've been expecting this move to happen a little bit earlier, but the let's say market participants kept volatility little changed as long as they were expecting the Federal Reserve to stand a hawkish mood as they have. And of course, we have seen gold prices sliding towards the 1232 key support area. But of course, it's also possible to see prices somewhere close to 1200 in the near term. For now, of course, I'm going to keep you up to date again tomorrow with the latest news. For now, thank you very much for watching us. See you soon. Bye-bye.